Good evening, master traders and money magnets. Looks like the back test of the critical pivot level that we had, it showed some follow through. The back test of 595.5, that was a previous pivot high on the macro chart. And you guys see that last Friday we back tested that level and it held. You guys can see today had some bullish follow through with the higher close, recaptured that 600.4 fib level, recaptured the 5 daily moving average, and here we are once again back in the sell zone that we've had all week last week around this 603-ish area. Some of my Discord members were saying the market makers are playing and disrespecting this 603 level. This is the sell zone, bit of a barrier here this last week for the bulls, but based on the context, at the very least, we know what areas need to clear if we want more upside. It's that 603 Fibonacci level. Now, how did the trading day go? As in my opinion, I believe it went pretty well. I like to trade on the 15-minute chart. And Unco was using the 600.4 level. I was using the 601.7 level, 603 level. These are the same levels that I give to you guys. And I wrote here in my Discord, bulls need to clear 601.7 and 603 to get bullish again with 604.5 and 606 in play. And as you guys can see on the 15-minute chart, we cleared 601.7. We cleared 603 on the 15-minute chart, which Uncle alerted in the group. I wrote here, so far looks like market makers got a lot of folks bearish so they can push it back up after they got a better price, a better lower buying price. I wrote here 603 cleared, putting 604.5 in play with 606 above. We cleared those levels, 601.7, we cleared 603, and we went and hit that 604.45. We got the 604.45, which Uncle mentioned. I wrote, I don't know how far this bounce will go. So if you played the 603 breakout or 601.7 breakout, please take most profits as close to 604.5-ish as possible and leave a runner. If 604 clears next, 606 incoming, still no puts unless 603-ish fails. We never cleared 604.5 unfortunately, and the rest of the day, the fun was over. The rest of the day the market just went back into low volatility mode. You guys can see how tiny those candles are. You saw how the morning pop, how decent sized candle, then it got smaller and smaller and it just consolidated. The rest of the day we did have a couple of setup. One, it was a fake out, but we recaptured the 603 level. Didn't lead to anything. We did get a false breakout setup and it took a while to hit that 601.7 level, but overall we only had a good move in the morning. The rest of the day was meh. But let's get to the daily chart. You guys can see why I say play it level to level, because you never know what's going to happen, what the market makers are going to do next. And as far as the daily chart goes, I cannot favor more upside unless that 603 and 606 level clear. As of right now, it is looking bullish based on the back. We cleared 595.5. This was a previous pivot high based on the daily chart, macro level, higher time frame. The back test was darn near perfect, so it's looking bullish to me. We just need to see if SPY's going to give us that higher high. When do I think we'll get it? Most likely FOMC. FOMC is this Wednesday at 2 p.m. and 2:30 p.m. with Uncle Powell. So tomorrow there's a good chance we're just gonna chop like similar to how we did today, and then we get the real big nasty move on Wednesday. So my opinion, my advice, my recommendation is to trade it level to level, secure whatever profits you can get or can attract, and then Wednesday FOMC we should get the real move in the but overall still, if we are to get that higher high, 603, 604.5 and 606 must clear. Now as far as being bearish goes, you guys can see, we don't need the arrow, do we? We don't need the arrow. You guys can see multiple times right around this area. Look at this area right here where Uncle is circling. That's the buy zone. You guys can see multiple times we had a push off of that area, including today. So if we are to be bearish, based on the context of where the buy zone is, 601.7 around the 5 DMA and 600.4 must fail along with 599. Now, I would feel feel a little more confident if we break it down again. As far as being bearish go, I would feel a little more confident being bearish if we break it down again. Why? Because of the context. We have potential M pattern that can possibly play out with June 13th being the low, the pivot low. So if we are to get bearish, 600.4, 599 must fail to put another test of 595.5 in play. And if 595.5 fails, you guys know the setup for the M pattern. Break it down, 595.5 should send us down to the next leg. And we do have a big gap all the way down at 579-ish. So what's the bearish plan? Short below 600.4, short below 599. Definitely short below 595.5. But if we are to get bullish, 603, 604.5, and 606 all must clear. Here is Triple Q recapturing the 5 DMA as well. It also cleared the 533 level. If we clear 535 and the fib level at 536.7, more upside incoming. Watch that 531.7 level. I have a support at 533, but watch 531.7. That's a fib level as well as around last Friday's sell zone. If we break back below it, I would favor 527 and 525 in play, and below 525 I would definitely be bear bias. But above 531.7 and 533 I am overall bullish. Tesla, we consolidating just below the 331.5 fib level. If we consolidate, get the breakout, look to long. A lot of times before we get the breakout, we consolidate just under the breakout level. Breakout plus volume, look to long. If we already get bearish, I need to see 328, 326.5, and 325 all fail. Possibly to put 320.5 back in play. Below 320.5, Uncle would be bear bias. NVDA looking bullish to me. Third bounce off that multi-week trend line, and we put in the breakout, we cleared some fib levels as well as recaptured the 5 DMA. As long as above 144, I'm bullish. We hit the 200% fib level at 145.6. If that clears, 147 and 150 plus in play. Do not look to short unless 142.5 fails. That'll be a breakdown of the multi-week trend line. 142.5 fails, 141.5, 140, 138 or lower incoming. Possibly, I think we can get like a $10 move to the downside if we break it down. Coin, what a pop to the upside, treating at 246.7 fib level as a support. Broke out the descending triangle pattern. As long as above 257.5, stay bullish. Next resistance are at 263 and 264.8. If those levels clear, 270 plus incoming. Do not get bearish unless we get a false breakout setup, which would need bears to break down 257.5. If it fails, look to short 256. Honestly, I think if we break back down, we can get a $10+ move back to the downside. Here is the VIX pulling back, hit that fib level around 19-ish. As long as above 19, bulls have a shot at a bounce, but they'll need to clear 20.4 to show bullish follow through. But if 19 fails, that is bearish for the VIX. Look to short. Guys, thank you so much for watching. Remember, you guys are money magnets. Don't let the market makers play you. You use them. Trade with the traps. Bye.